What is going on, investors? Hopefully, you guys are having a great day. Time to talk about Plug Power, ticker symbol Plug. This stock has been on absolute fire, up 864%, market cap at about $26 billion. On today's video, we're going to talk about the most recent quarter. It's really interesting and kind of weird, honestly. I have not seen this in a while on a statement of operations. We've actually got negative reporting revenue. So believe it or not, they're reporting negative revenue on the top line of the balance sheet. Not something that you see every day. We'll explain how you could potentially digest that as a shareholder. And then finally, we'll get over to the stock chart. This stock made a high just a couple weeks ago at about $75 per share. And now we're down here at $46 per share. We'll talk about the price action that we're seeing down here, see what's going on with Plug Power, where it could potentially go in the coming days. Now, they had a major miss on the top and the bottom line in their reporting, mainly because they had this $456 million loss that they had to recognize because of a vesting of a customer's remaining warrants. So they had a customer with some warrants and they decided to vest those in the quarter. And what it did is it basically turned their revenues negative. So when you see these parentheses around these numbers, it means these are negative numbers. Now, obviously a company cannot have negative revenue, but they're deciding to recognize it here from an accounting purposes. So I'm going to tell you how you can digest this. And then when we get over to cash flows, we'll get a better sense of how the quarter actually was. So in this sense, what I'm going to show you here is take a look. For the quarter, they said that they earned a negative $316 in revenue. Okay, not gross profit. Gross profit, it's understandable that a company like Plug Power and many companies out there could have negative gross profit. After you factor in revenues and cost, it can be negative. It's not a big deal, honestly, but to have negative revenues is really awkward and it makes it difficult, in my opinion, to analyze the company from that perspective. So what we're going to do is we're going to focus on the cost side first. So we spent $78 million in the 3 months ended in 2019. That has ballooned a little bit. Now we're up to $106 million just in cost. Now you see here in a more normalized quarter, they had $91 million in terms of net revenue. So if they're able to grow that without these funky kind of accounting things, well, look, they're probably turning a profit, at least on a gross profit basis. Now, that's not the only story. For the last 3 months, we also have research and development fees, selling general and administrative fees. Those went from 20 all the way up to 47, so more than doubled on that side. Now, for the full year, you've got expenses in terms of cost of revenue went from 202 million up to 322 million. So a fairly, strong acceleration in terms of costs. Since we can't see how quickly revenues actually accelerated here on the top line, you'd have to assume this is probably going to wipe out a fair amount of those revenues that did come in. Now, total operating expenses went from 78 to 126. Now, so obviously with the funky accounting, we can't get a great sense of what's happening. So here's where I think you can get a better idea of what happened in the quarter for Plug Power. You come down to your statement of cash flows, because what you do is you come down here and you pull down this net income number. Actually, for the full year here, you pull down this negative $561 million. So you pull that down here. Here it was last year. It looks like they lost about $85 million in 2019. Now, here's what they're able to add back is that provision for common stock warrants. This is what they talked about in the press release, where they had this big $456 million, that they had to recognize in the quarter. I believe most of that is probably recognized here in this 437. And so what happens is you get this negative net loss. You pull that down. Well, you get to add back in things like depreciation, stock-based compensation. Okay. Now you get to add back in this provision for stock warrants, and there's some things that get taken out, and then you get an idea of how much cash actually was generated, cash used or gained in operating activities. And we see here they lost $156 million in actual cash dollars running the business in 2020. That's up threefold. We lost about $51 million in 2019 This year, up again threefold to 156. You see, in the investing side, they invested heavily in the business, particularly on this net cash paid for acquisition. So purchase of plant and equipment went up quite a bit as well. And then purchase of construction of leased property went up huge, but also big time here, cash paid for acquisitions. You see, we spent about $14 million on our investing activities last year. This year, boom, all the way up to $95 million. Now, where does this company, how is this company staying alive? Well, they're staying alive by issuing shares of the company. This company, in my opinion, is better at selling the shares of the company than they are of their own product. You see proceeds from public offering came in at $1 billion. We see proceeds from issuance of convertible senior notes came in at $200 million. Net cash provided by the financing activities, $1.5 billion. Now, obviously, that's a good thing when you're losing about $156 million operating your business, and you lost another close to $100 million in terms of investing in the business. It's actually pretty darn good that you're generating $1.5 billion on the financing of the common stock of the company. Now, let's come over to the balance sheet, see how financially healthy this company is, because chances are this company is selling a lot of hopes and dreams. And I think that their losses are probably likely to keep going for Plug Power in the foreseeable future. They have plenty of cash up here. They've got about $1.3 billion. They've got a little bit of restricted cash here. They've got some receivables as well. They have a fair amount of inventory. In fact, inventory's doubled over the last year. Could be a good thing, could be a bad thing. But in terms of current assets, boy, those have gone up a lot. We went from $300 million up to $1.6 billion. Again, mainly bolstered by this cash balance, which we know is bolstered by just simply the issuance of common stock, either through a public offering, warrants, convertible debt, things like that. Total assets ticked up to about $2.4 billion. Everything looks pretty clean here. A lot of it is tied up in leased property and kind of this restricted cash. Not a ton of it is in goodwill or intangible assets. So that's actually a pretty good sign, in my opinion. Long-term debt sitting here at $150, not bad. Okay. And then I think they have some current portion of long-term debt sitting at about $24 million. So they got about $175 million worth of debt. Not too bad considering their cash position, their asset position, and their ability to raise money through these convertible notes and things like that. So all things considered, balance sheet looks pretty good. Statement operation, complete mess, complete and utter disaster. And cash flows paints a picture of a story, more of a fledgling company than one that is thriving. Now, when you get over the stock chart, it paints the story of a company that is on the rise and just absolutely tearing it up. But I think a lot of this is retail investor hype and things like that. And that's not a bad thing. You look at GameStop stock this morning or any of those stocks, that is, led by retail investor hype. Now, the stock chart paints a pretty ugly picture, in my opinion. So we made this top up here in the, $50, $60, $70 per share. It is completely broken down, and it is breaking down this morning. The stock looks to be off about 5 or 6% heading into the regular trade. Now, anything can happen during the regular trade. This thing can bounce back. But the problem is we've got very few candles right here sitting between $57 and $37. We've got $20 in price action where there's almost no candles. And you see, once this stock broke that like $59, $60 range, it headed down very quickly. In fact, it came all the way down to 37. People think I just put these lines on the graph just, intermittently or just at my own leisure. No, we had very little price action here. So if this stock started to come down here, it meant there was very few buyers here. Okay, these candle charts, these are people. Okay, these are people that are buying the stock. And when you don't see very many of them, that means there's no people there to buy the stock. And so when the stock comes down here, it just wants to slice down through here. Now, picking it up here at 37 was not bad. Obviously, some people stepped in very quickly because the stock came, you see this big green wick right here. This stock came all the way down here and then bounced up pretty quickly, okay? And now this is where we're hanging out right here. So we could consolidate in this range, start to pick up these candles, aka people that are going to support the stock at this level. We'll see what happens. Personally, I wouldn't want to step in on this one at all. When you take a look from a fundamental basis, I wouldn't want to step in on this this company at all. Just doesn't make a lot of sense from a fundamental perspective. But from a price chart perspective, from a technical perspective, you do have a level here at $37, which is about, we'll call that about $8, $9 off where the stock is right now. You get a retracement into there, wouldn't be maybe the worst thing. A little bit lower than that, you've got the 20s, and then we had this kind of upward sideways consolidation that occurred in the stock initially. Anywhere in these channels actually would be interesting, but now we're talking about back to $15, $16 per share. This company is doing a lot of fundraising by issuing stock. I think they're going to continue that, so I don't necessarily think there needs to be this mad rush to get into this stock. This is a stock that's been around a long time as well, and it's kind of had, this stock was around all the way back into really almost like the 90s, okay? And it had a lot of empty promises. It's peaked up a little bit. It's peaked up recently, but this doesn't typically paint the picture of a stock that is going to make just this big, strong comeback. I think this one's kind of getting pumped up a little bit. So we'll see. Maybe you agree or disagree with me. Let me know in the comments. I know in the past I've posted videos on Plug Power, haven't always given it a glowing review. So we'll see who's right in the end. Thanks for tuning in. We'll have more videos. Good luck with your investments.